Well, holy smokes, look at Disney today, up 13%. You don't see that much with blue chip companies like Disney. We're going to talk about that subscription service, some technicals, some price targets, and give a good breakdown of Disney. If you guys haven't caught up with the news, this should give you everything you need to know if you're looking to buy Disney or if you just want to know more about the whole Disney platform. And as always, guys, I am Josh. Thank you for joining me here today. We are a new channel here doing analysis, news, just talking about the best stocks to get into. I'm trying to give you guys the best insight instead of just telling you what to do. I try to give you guys all the information you need to make your own decision, and that's really the goal with investing, is making your own decisions. And we're going to do the same here with Disney. I love this stock. I always have. I've been buying this stock ever since the dip in the middle of March in one of my accounts. I actually bought it in a dividend portfolio. Silly enough, they cut dividends, but still, I'll take it. I'll take the growth. Now, the reason they were able to do that is they just kept announcing new things, such as 20 new Marvel and Star Wars series. They had a bunch of different things here, and they're already up to 90 million subscribers to the Disney Plus streaming platform. So that is a lot. I mean, they are on track to catch up to Netflix, right? Netflix is at 201 million global subscribers for Q4, and Disney Plus has only been up for about a year now, if I'm correct. I mean, Disney Plus came out about a year from today, which is absolutely stunning. They had perfect timing with this whole thing. But more than anything, their guidance, they had a huge guidance that is absolutely incredible. The year 2024, they expect 300 million to 350 million global streaming subscribers. This includes their subsidiaries Hulu and ESPN. So they have a lot more leverage than, say, something like Netflix, because Disney owns part of Hulu. They own 66%, while Comcast owns 33%. And then, of course, ESPN. So Hulu, ESPN, and Disney, they're expected 300 million to 350 million global subscriptions. All three of these can be bundled together. They have so much potential here to sign with TV deals and so on and so forth, because they really own all of these companies at the end of the day, and they could package and bundle these together. That's just something that Netflix can't do. They're solo there. So a lot more leverage in the Disney game. So as a streaming platform, this company is already being valued extremely high, and deservingly, because they will hit profitability by 2024, as they stated in their earnings release or earnings presentation. So last year in April, right, 60 to 90 million was their target by 2024. Obviously, they blew that out of the park, and they're already at 90 million subscribers. And by 2024, they expect 230 to 260 million subscribers. Now, this is big numbers, assuming they're at $8. If they're even able to get up to 200 million, which would be very similar to Netflix, they're roughly at 200 million, and then they are charging $8 per month for these. That's $1.6 billion per month. Times that by 12, and we have a yearly income of just Disney Plus of $19 billion. That's why the price hike has been so high today. We're up 13%, down a little bit in after hours, surprisingly. This is absolutely fantastic outlook, including they also gave their numbers for Hulu and ESPN Plus. Hulu has approximately 38.8 million subscribers, and ESPN Plus has around 11.5 million. As for the financials, guys, we got to look at this chart here. Looking at back in 2017, 2018, 2019, we've been seeing steady growth, and we would have seen a very nice growth here if the parks weren't all shut down. They did lose money. But needless to say, guys, once the cruises get running again and the parks get running again, they could always just add new parks. There's just so much growth potential with Disney, and that's really the highlights of Disney. And then adding the streaming service, and of course, they're still going to be in movie theaters. There's just so much good in Disney right now. If you are along on Disney, it makes all the sense in the world to just keep investing all of your money into Disney if that's what you believe in, because they own so much more than just the Disney brand. They own parts of everything: Hulu, ESPN. Some people don't even know that. They own resorts, the cruise ship lines. It's just things that goes on and on and on. It's so much growth in all of those. They could add new Disneylands into other countries. They have some in China, Hong Kong. They have some in Tokyo, and then of course California, Florida, all those different units. As far as I know, I don't think there's a UK Disneyland. Don't know what the interest is there, but there's just so much potential there. And then the streaming platform is the thing that we could see in the foreseeable sight. So as far as I could see, this business will continue to grow year over year, assumingly till forever, and at least until my lifetime for sure. So many analysts have boosted their price targets for Disney up to $180 range. Whenever I did my analysis on it, I was getting a number closer to $200 by the end of the year. That presents a plentiful of upside here. And even if we can just get a minor pullback in the charts here, we're going to have a great buying opportunity for all of us Disney longs. I'm going to keep adding it into my dividend portfolio. I believe that the dividend will be back in a few years, hopefully. I don't know when they're planning on bringing the dividend back. back. But for me, I'm still a long ways away from actually needing that dividend income for anything else. So the growth is just as good for me other than just dividend reinvesting. It's really the same difference for me knowing that Disney will come back with dividends eventually. But as for these price targets, guys, if we see this, there's a huge gap that came up yesterday. This gap is a little bit concerning to me because we saw it go from $155 to $170, $180 today. It closed at around $175 down to $174 after hours. But if we see a correction or some downward news here, some downward corona news where they can't open their parks and so on and so forth, the business will correct down and hopefully fill this gap. If it fills this gap, we are buying everything we can, or I am buying everything I can. And even at this rate, I slowly will just add it to my M1 account. I have an M1 finance account that just auto invests into all the different companies, keeps me balanced, so I do that. There's a link down to that down in the description for $10 free into your M1. But basically, I stay equally weighted in all these blue chip companies that I'm into, plus some ETFs. So Disney is going to stay in that for my M1 finance account. But guys, we're in a huge uptrend just in the past 2 months. The past 2 months, we've gone up 50%. That just does not happen in blue chip companies very often. So we know there's a lot of upward pressure on this stock, a lot of upward momentum. And we can see that continuing upwards. However, we are going to need a retracement of some sort eventually, as all stocks need to retrace at some point. But with Disney, we just don't know how large that is. All these little gray lines right here is gap fill. We're on Webull right now. You could just hit gap and then fill all gaps if you would like. And they show you all the gaps. Webull has a fantastic online charting system. But as for me, guys, I'm confident in this, and I'm going to keep going all the way up till around $200 range. That leaves me about a 14% upside, which is not the best, but I've been getting in for a while, so my cost basis is way down, so it's fine for me. However, for all of you looking to get in, it might not be the best time considering the upside isn't as high. If you're looking at a 5-year down the road upside, this potential is incredible with Disney Plus ramping up, assuming they get 200 million subscribers. That is an absolute monstrous income stream there. Just add that 11 billion already to the 69 billion, assuming they don't grow in anything else. We're already seeing incredible growth year over year. And then dividends, of course, will come back eventually. So folks, this is one that you're going to want to add to your watch list for either growth or dividends, or dividend growth, depending on what kind of watch list you have. This is a hybrid at this point. There's not going to be a dividend for a few years. That's what my assumption is. Now, assuming that Disney Plus gets profitable around 2024 as new content comes out, they assume they're going to be profitable around 2024. That is when I could assume maybe that dividends will come back, or they could just stay in a hyper growth phase for the next 10 years and I would be happy. And then at that point I could or I can just sell the stock and have incredible capital growth over those years. So either way, for me, it's fine. But yes, if you are relying on dividend income, then this one maybe not be the play for you for your dividend account. But for a growth account, Disney is a no-brainer. Wait for a little bit of a pullback. Hopefully we see one soon so we get another buying opportunity. It's an obvious reason why it jumped 13% this month. 137 million streaming subscribers across all 3 of their streaming platforms. And they've really become the second largest player in there behind Netflix. Amazon Prime, you could estimate around 30 million of the Prime users actually use Prime Video. So it's not even close. So yeah, guys, this is my Disney analysis. Hopefully you enjoyed. We're a new channel here. Please subscribe. We're trying to hit 1,000 subscribers by January. So I'd appreciate you guys if you could do that for me. So hopefully I helped you guys out a little bit with Disney. Have a great day.